Okay, let's dive straight into the Bitcoin market. There's been some pretty interesting activity lately, especially from the larger investors.
Absolutely. Following that recent price correction, yeah.
Right. And it really makes you wonder, are these actions maybe signaling something? Like, are we looking at a potential recovery here?
That's the big question everyone's asking.
And hey, if you find this kind of analysis useful, please do hit that like button and subscribe. It really helps us keep digging into these topics for you.
It does. So where should we start? The buying activity.
Yeah, let's start there. The data seems to show quite a bit of buying from, the whales and the long-term holders.
It really does. Crypto quant analyst Barak Kazmechi highlighted some key data. On April 9th, there was a massive inflow.
How massive we're talking?
Around $3.6 billion worth of Bitcoin. So that's 48,575 BTC moving into wallets we associate with these long-term investors.
Wow, $3.6 billion in one day.
Yep. And what's really striking is that this was the largest single day inflow to those types of wallets since way back in February 2022.
Okay, that's definitely significant. And Kazmeshi noted something about their behavior during downturns.
Right. He pointed out that these specific wallets, they tend to, bulk up their holdings when the market dips. They see it as an opportunity.
And this specific buying, the April 9th one,
Yeah.
that happened when Bitcoin was around $76,000.
That's right. Around that 76K mark. So buying into the weakness.
And it wasn't just that one day, was it? I think another analyst, Kaukonomy, also from CryptoQuant, had something to say.
Yes, exactly. Kaukonomy reported that whale wallets, sort of the big individual holders, have been buying pretty consistently since March.
Consistently buying. How much?
They've added over 100,000 Bitcoin to their reserves since March began.
Over 100,000 BTC. That's a lot of conviction.
It certainly looks that way, and what's also interesting is when this happened.
Oh, what was the context?
Well, it occurred during a time when on-chain activity was pretty low, fewer transactions happening on the blockchain itself.
Okay.
And also, participation from smaller retail investors seemed quite reduced.
So the little guys were maybe stepping back, but the big players were stepping in.
Precisely. It suggests a divergence. The whales seem to be viewing these lower prices as prime buying opportunities, probably thinking long-term.
Maybe doing some cost averaging, perhaps?
Mm-hmm.
Buying steadily?
That's a very likely strategy, yeah. Spreading out purchases to average the cost basis over time, aiming for those longer-term gains.
Makes sense. And it wasn't just the sort of active whales, right? What about the really long-term holders, the ones who haven't moved coins in ages?
Your coin. There's a metric for that, the long-term holder net position change. It tracks wallets inactive for over 155 days.
Okay, and what did that show?
Well, on April 6th, it actually turned positive, and that was for the first time in 6 months.
Positive means they started buying again, or at least stopped selling.
It means more of these long-term holders were accumulating, adding to their positions, than were selling off. So a net inflow, yeah. A shift in behavior after months of likely taking some profits or de-risking during the crypto winter.
Right, they'd been selling before that.
Yeah, exactly. And following this switch, this renewed buying from LTHs, Bitcoin's price actually saw a noticeable jump, about 12%.
A 12% increase right after they started buying again. That does suggest they carry some weight in the market.
It certainly points to their potential influence, yes. When these long-term, often considered strong hands start accumulating, the market tends to notice.
Okay, so we have the whales buying, the long-term holders flipping back to accumulation. How did this actually translate into price action? Let's look at the charts, the technicals.
Right. So after that correction, Bitcoin did manage to climb back up. It successfully moved above the $83,000 level, which was encouraging.
Was there anything specific helping that move?
There was some support from the broader global markets. Remember, President Trump temporarily suspended some tariffs that seemed to bring a little relief rally across the board, which likely helped Bitcoin too.
Right, the tariff news.
Mm-hmm.
But even with that bounce, we're still quite a bit off the all-time high from January, aren't we?
Oh, definitely. We're still sitting about 24% below that peak. So perspective is important here. It's a recovery, but there's ground to make up.
Okay, what about key levels, support and resistance zones analysts are watching?
While looking at Glassnode data, there appears to be pretty significant support around the $79,000 mark. That level seems to be holding some importance.
79,000. And resistance.
We recently broke through a resistance level that was around $82,080. Getting past that was a positive step.
And I saw a note from analyst Cold-Blooded Schiller about a trend line.
Yes, he noted that Bitcoin's price had been grinding against a falling trend line, and it was basically testing a potential breakout to the upside, challenging that downward pressure.
And where are we trading right now, roughly?
Currently hovering around the $83,600 mark.
Okay, and that puts us near a pretty major technical indicator, right?
Yeah.
The 200-day moving average.
It does. We're approaching it, but 200-day moving average is sitting at approximately $87,100 right now.
And that's often seen as like the line in the sand for the long-term trend.
Exactly. Many traders and analysts view it that way. Getting decisively above that $87,100 level is seen as pretty critical to, reestablishing that long-term bullish momentum.
So $87,100 is the big one to watch overhead. What about nearer term?
Analysts are saying that just holding above $81,000 is important for stability, and reclaiming $85,000 would be another strong bullish signal in the shorter term.
And a downside risk if we can't hold these levels.
Well, if Bitcoin were to fall back below $80,000, that could definitely increase selling pressure. We might see a move to retest that $75,000 support area again.
Okay, so key levels are roughly 79K support. You need to break 87K for long-term trend and watch out below 80K.
That's a good summary of the technical picture right now.
You mentioned the Trump tariff suspension earlier. How much of the broader macroeconomic factors playing into things? Is that still a major driver?
It seems to be, yes. That 90-day suspension provided some short-term breathing room for the markets, a bit of relief.
But it's temporary.
Exactly. The underlying uncertainty about trade tensions, especially between the US and China, hasn't really gone away. It's still lingering.
And if those tensions flared up again,
any renewed escalation could absolutely put pressure back on markets, and Bitcoin often reacts to that kind of global risk sentiment. So, yeah, potentially negative.
But some analysts are feeling a bit more optimistic about the correction phase.
Yes, analyst Snada, for instance, suggested that maybe the worst of this specific correction is behind us. They floated $70,000 as perhaps a kind of worst-case scenario level for Bitcoin in the near term.
Okay, $70 is a potential floor if things get rocky again. So if we pull all this together, the whale buying, the LTH accumulation, the technical levels, the macro uncertainty, what's the bigger picture message?
Well, the overall data strongly suggests that the larger, perhaps more strategic Bitcoin investors are viewing this current dip fundamentally differently than maybe shorter-term traders.
How so?
They seem to see it as a buying opportunity, a chance to strengthen their long-term positions rather than a reason to panic sell.
Right, the fact that whales aren't dumping their bags, men are actually adding, is pretty telling.
Exactly. It hints that maybe they believe this correction isn't the start of a bear market, but perhaps just a consolidation or a pullback within a larger ongoing bull cycle.
Is there any other data supporting that long-term conviction idea?
There is. Glassnumber analysis also shows that a pretty hefty chunk, 63% of the total Bitcoin supply hasn't moved in over a year.
63% hasn't moved in a year.
Correct. That points to a really strong holding sentiment among a large base of investors, people who are in it for the long haul, not just quick flips.
So less speculative froth, maybe, and more focus on fundamentals.
It appears that way. It could be a sign of the market maturing slightly, with maybe a bit less short-term speculation dominating and more attention being paid to the underlying value proposition or long-term trends.
Okay, so let's try and wrap this up. To summarize, despite the market being a bit shaky recently, we've seen some really significant buying coming from the big fish, the whales, and the long-term holders.
Yeah, they've been actively accumulating during this dip.
And this behavior, their willingness to buy when prices are lower, could be interpreted as a positive signal, right? A potential sign that a recovery might be underway, driven by these major players building their positions.
It's definitely one interpretation, yes, a sign of underlying strength and conviction from those with significant capital.
But as always in crypto, nothing's guaranteed. We absolutely need to keep a close eye on the price action, those key technical levels we talk about.
Especially that 200-day moving average.
And also keep tabs on those wider macroeconomic developments like trade tensions, because they can still throw a wrench in the works.
Absolutely. The picture is complex and things can change quickly. Constant monitoring is key.
You really should think, though, about the long-term game these major investors are playing. What do they see that perhaps others don't during these dips? That's definitely something to ponder.
It is. Their strategies and conviction levels during volatility offer fascinating insights.
Well, thank you for walking through all that data with me. It's been really insightful.
My pleasure. Always interesting to unpack these market dynamics.
And for everyone listening, if you found this helpful, please do remember to like this video and subscribe to the channel for more deep dives like this one. We'll catch you on the next one.